Hello traders, the title of this video is how to trade the GBP Australian dollar in 2017 like a pro. How to trade the British pound Australian dollar currency pair in 2017 like a pro. Let's get started. We are on a yearly chart. As you can see, we have last year was very bearish, you can see, and this year is also a bearish. As they say, one should not catch a falling knife. So because the price is going down, it will be a little bit crazy to try to buy it as it's falling like this. All right. However, we need to understand what's happening here, because if you look at last year, we got a tail, the tail of this candlestick bar here, indicating to us there is a support in this zone. But if you see this year, the price is not finding a support in that zone, which means it's looking bearish for the British pound, Australian dollar, because though there was a support here, there were buyers here. Those buyers are no more willing to buy the currency pair. So it's losing support in this zone. All right, this is what we can see on the yearly chart. I want to highlight one important key level for traders is the level of 176.76. 176.76. That's the 50% Fibonacci retracement level of the price action from here, where my cursor is, all the way up here. You can see that I use a conservative Fibonacci retracement. I did not push it all the way down to the low or to the high here. I stopped at the closing price here and also at the opening price here. So this is a conservative 50% Fibonacci retracement level at 176.76. What I would say to traders at this point in time, as long as we stay below that 176.76, one should give priority to bearish signal. If one is buying below 176.76, one should be very careful. So for day trading and also for swing trading purposes, if we see a bullish trading setup below that level, we need to handle it carefully. All right? Very important, because the price is losing support here. All right. What I would prefer, my expectation is that this currency pair continue to go down more, even to the level of 157.82, 157.82, the red line here, forming a candlestick bar that is similar to this one here. You see this one here? All right, something like that, with a long tail piercing through the 157.82. So my expectation is that it continue to go down all the way to the 157.82, maybe a little bit below it, and to find a support and quickly retrace back up, forming a candlestick bar that is similar to this one here. That remains to be seen. All right? All right? Very important. This level of 157.82 is very important key level. So we need to monitor the reaction of the price if it comes near this level. All right? Talking about a top-down trading method, going from the yearly chart, we are now going to the monthly chart to analyze the charts. All right. On the monthly chart, you can see that the price has exhibited. You see there was this move down, first move down, then there was this rally up, and then we see this a fast move down. Now we see another move up. So the minimum price move is now being kaput, all right, it's no more valid. So the price may continue to go down a little bit more. I would prefer it the way it's hanging here like this. I don't like it. I would prefer it to come down more, to revisit the level of 157.82, maybe even go a little bit below it, and then form a long tail to close above it. All right, that's what we will prefer. All right. So also on the monthly chart, there are two key levels that I want to highlight to traders. The first one is the first long-term equilibrium price level for the British pound, Australian dollar. The first long-term equilibrium price level for the British pound, Australian dollar is at 167.77. One should not forget that level throughout 2017, because it is one of the most influential key levels. 167.77. All right. The current short-term equilibrium price level that we must monitor up to the end of the first week of March 2017 is at 16429. 16429. That is the current short-term equilibrium price level that will remain in place until we have a new short-term equilibrium price level. All right. So here it is. Okay. All right. So those are the two key levels that we can highlight to traders on the monthly charts. All right. Going to the weekly chart. Going to the weekly chart, I want to draw on my chart a trend line. So here it is. This trend line here, connecting. Hold on, please. This point here on the weekly chart and this one here. We have this red trend line. Okay, so draw this line on your weekly chart. This red trend line, very important. So we can say right now that the price is now in a declining channel. In fact, it's going down very fast right now. If I draw my trend line here, look carefully here. What I'm doing, I'm drawing a line through this point that is parallel to the red line. Okay, carefully, carefully, carefully. Hold on, please. I'll get there soon. Okay, is it parallel? Looks like it. Looks like it. All right, everybody's happy. All right, something like that. So we have a declining channel. Not only that, the price is now out of that declining channel, indicating to us that the bearish momentum is increasing. You can see here, it came out of the channel, and now it's trying to go back inside it. I would prefer it to go down a little bit more before closing back inside that red channel. Traders should also be aware of the median line of that red channel. Using market geometry, we will now measure the width of that declining channel and project it in a direction of the price to pinpoint the possible reversal point. Here we are, something like that. So we measure the width of that red channel and then we project it in a direction of the price. This will allow us to have a new channel here, which I'm going to color also into red. With those trend lines, we will be able to pinpoint the high probability trading setup on or near either the horizontal key level or near those red trend line. I will also put on my chart the median line of my second channel. So you can see that as the price came out of the first channel, it went down to retest the median line of the second channel. Also remember the intersection of this level of 15782 and the median line of the second channel, that is also a hot spot trading zone. I've talked about this before. Intersection between the horizontal key level and the trend line are hot spot trading zone. All right, here it is. So our expectation for this British pound Australian dollar is that normally this is our expectation. It doesn't mean that it cannot go up from here. We will prefer it to go down a little bit more, even below the 15782 with a long tail, okay, before closing back inside it. From that point onward, we will monitor, okay, the reaction of the price and see whether, okay, the fundamentals are improving for the British pound in comparison to the Australian dollar, okay. Very quickly, I'll go back to the yearly chart. Is it yearly chart or? All right, on the yearly chart. So this level of 15782, I believe a lot of professionals will want it to come down near that level. All right. So remember what I said, also very important. As long as it's below 17676, which is the 50% Fibonacci retracement level that I've mentioned before, one should give priority to bear signal. Does not mean that we cannot buy. All right. But if we want to buy below that level, we need to be aware of all the key level and the trend line that are ahead of us and handle it carefully. All right, am I making sense to you? One more thing very important before I forget is this. All right, very, very important what I need to mention to traders. The British pound Australian dollar is not for new traders. All right, so if you are a beginner Forex trader, you are struggling with Forex trading, all right, or you hate to lose as a day trader, swing trader, and position trader, you may stay away from the British pound Australian dollar. Did you get it? I said it, all right? I said it because it's quite volatile and it runs very fast. And when you enter the trade straight away, you may notice that your broker may take a big chunk of your trading account straight away. because the risk is high. Therefore, the broker also is protecting itself by asking for more stop loss. All right. So be aware of that, all right? But if you know exactly what you are doing and you get it right, you will be rewarded because it will run very fast, all right? But know exactly what you are doing, and if you want to trade it, use a tiny stop loss, but you know that your broker will ask for a bigger stop loss by all means, so you know exactly what you are doing, and do not move your stop loss when you are trading this stock, this currency pair, because if you get it wrong, let it go. That's losing trade, gone, and don't bother about it. Don't move your stop loss when you are trading this currency pair. This British pound Australian dollar is also similar to the British pound Swiss franc currency pair, which are called the beasts. So in fact, we have two beasts in my view, the British pound Swiss franc and also the British pound Australian dollar. What we are doing here, that's what we call technical analysis. The best approach is always to combine the technical analysis and the fundamental. Check the economy news Forex factory, all right, very important. And always combine, know when the economy news are due, all right, and which economy is also coming, okay, during the week will affect how the professional Forex trader will be placing their trade. So you may be saying to me, Joe, why do I need all these key levels? The reason why we need those key levels is to map out the chart, where are the resistance level, where are the support level, all right? And we are looking for trading setup around those key levels. You can see that by projecting the first channel, see where the price is stop. So if you have those lines on your chart, the intersection between the ones 5782 and the median line of the second chart, you will know that this is a hot spot trading zone. There is another hot spot trading zone right here. Okay, another one right here. All right. So also near those key levels. All right. So once we see, myself, I would prefer to come down here. All right, if it come down here, so on the weekly chart, we will say, okay, it's retesting this consolidation that was happening, okay, in this session. So don't rush. Don't be the first person rushing to the trade. Be gentle. Monitor carefully. If it settles nicely, all right, then implement a top-down trading method. The candlestick bar on your trading setup time frame must close. So if you are using a weekly chart, the weekly candlestick bar must close. If you are using a monthly chart for trading setup, that candlestick bar must close. If you are using daily chart, must close on that time frame before you even consider to trade it. The first week of the month is quite challenging for trading Forex due to the high impact economy news that are released during the first week of the month. I've talked about this before last year. So if you are subscriber to 24 Forex Trader YouTube channel, you will know that I've already talked about this last year, and I will not repeat myself because traders say I'm repeating myself too much. All right, but for new traders, I just mention it to you right now. So the current market pattern is what? It's a declining channel. That market pattern is what will determine our appropriate trading strategy. How do you trade in a declining channel? All right? So it's hanging here. So, all right, this is what's going on now, okay? All right? Okay, so price going down, price will form lower lows, lower high until the price fails to form a new lower low. Either you form equal low or form the first higher low, indicating to us that the bearish momentum is diminishing. Looking at the price structure, my expectation is that it should continue to go down more. That will remove all the doubt, the anxiety. Then we will look at it and say, okay, if you got a long tail, that would be nice. Then we will say, okay, find a bit of support somewhere near the 15782, a little bit below it with a long tail will be beautiful for us to consider what's happening. At the end of the day, okay, one more time, at the end of the day, the bigger picture is not looking, okay, bullish for this currency pair, because you can see if this bullish trend is now coming down almost to the 78% Fibonacci retracement level of this move up. So some professional trader will even prefer it to come down all the way to the cycle point near the level of 15157. All right, so as I explained to today before, our trading strategy is very simple. Look for a valid trading setup, all right? Look for high probability trading setup, and then validate the trading setup. Implement a top-down trading method without ignoring the economy news and the fundamental. If the signal fails, just come out, all right? If you have any question or suggestion, all right, put in the comment section. And in due course, I will be recording another video to answer your specific question. If you like the video, give us the thumbs up. If you dislike it, don't be afraid. give us the turn down because we want to know what traders are liking, what traders do not like, so we may focus on what you truly like, all right? This is what we are trying to do with the channel. So by saying like and dislike, doesn't matter. We want to know what traders prefer. If more people like one topic, we will be posting more video related to that topic, all right? This is the end of this tutorial. We are the TSTW24 traders talking about how to trade the British pound Australian dollar in 2017 like a pro. One more time, this is not for new traders, but for traders that know exactly what they are doing. Until the next time, enjoy yourself and be very happy. Speak to you soon.